to the India Retail Forum 2012. For those of you who were up early enough to read the newspapers this morning and went past the sports pages, one of the things that we did see in the business press was an argument between the government of India and international agencies on where growth in India is likely to be this year and in the year ahead. The government's still sitting pretty on its number of 6% plus growth. We're now seeing numbers from international agencies that talk about sub 5% growth. 4.9 was the figure that I saw this morning. What is that going to mean? Well, the one thing the government did say was they are making changes in the economy. They are accelerating growth through various reform measures, and they are expecting a change in foreign direct retail investment in retail to make a change in the number of jobs. In fact, one minister said, we need FDI in retail because we need to create jobs for all those young people who are going to be entering the economy. Whose numbers are right? Where is retail going in this country? Where is the economy going in this country? We're going to kick off with our pre-inaugural session in analyzing those numbers and analyzing Indian retail. We've got consultants from all over the world who are going to decipher the numbers, they're going to explain the trends, and they're going to hopefully, try and make sense of the year ahead and our business in the year ahead. So to kick off, I'm going to call Abhik Singhi, Head of Retail and Consumer Products Sector, Asia Pacific at BCG, who's going to talk about the Indian tiger roaring, an analysis of how 1 billion plus people consume.
Good morning, everyone. So, what I wanted to talk about today is around how India shops. Yesterday, I was making a presentation to a group of people at IIM Bangalore, and one of the things that came up in the discussion was the fact that if you look at the Indian economy today, it is, give or take, about $1.4 trillion. If you look at the size of the consumption, that is close to $1 trillion today. However, over the next 8 years, that number is expected to increase to $3.6 trillion. Now, that is all a lot of numbers, but what does it mean in terms of implications for retailers, implications for people who are in the retail market, is something which I want to talk about today. I'm sure that many of you have seen some version of this Indian income pyramid at some point or the other. Where you have the affluent, some people will put it at $18,000, some people will put it at $20,000, depending on where the dollar is, the number could actually go up by 10-15% up or down anyways. And you have this pyramid picture, and there are enough and more tomes talking about how this pyramid is going to change into a diamond and so on and so forth. In my view, this actually just tells you half the picture, because income-based segmentation is only one part of it, and I wanted to start off with that because that's a very important implication in terms of how retailers choose the consumers that they go after, what missions do they go after, and what they need to do. So what is really the full picture? This is the full picture. So if you look at it, it's not only the pyramid which matters. Within the pyramid, there are significant differences. Earlier this year, we did a research of close to 12,000 consumers in India to find out really what really drives consumption behavior and shopping behavior. This is the largest ever shopping study done in the history of research in India, close to 12,000 consumers covering different categories, and some of the results were truly mind-boggling. So let me start with the first one, which is if you look at the affluent segment, people who earn about $20,000 per year, give or take 10 lakhs, are they all alike? And the short answer is no. One can be cute about it and say, there's the 10 lakh and there's the 1 crore and then there's the 10 crore, but that really doesn't tell the picture. The bigger difference, what we found, was driven by what is it that the person does, what is the education, and where is he or she based. So to make it real, if you think about somebody who is earning 20 lakhs, but is actually a trader in Nasik, he's going to be very different than the set of people sitting in this room, many of whom are professionally educated and therefore the tag of professional affluent. Where they shop, how they save, where they spend is completely different. So that's the first part of the story. I was talking about the 1 trillion going to the 3.6 trillion. And what is that really driven by? A couple of my colleagues and I have recently released a book which talks about the $10 trillion prize, which is the size of the consumer economy in China and India in 2020. We found the biggest driver of this growth is the consumer. And let me make it real for you. A child who was born in 1960 in India could expect to live about 40 years. Per capita consumption at the time of birth was about 240. If the person actually did die at 42, the per capita consumption would have been 530. Over the lifetime, the person would have consumed $15,000. Take this person's grandchild born in 2009. She will live longer, have a higher income, and consume more. At the very least, in 2 generations, this is going to increase by about 13 times. My colleagues who were co-authoring this are Anglo-Saxon, and with no disrespect to the Anglo-Saxons in the house, they were a bit conservative. So they assumed that from 2020 onwards, India will grow at 3% every year. I said, fine. Let's take that assumption, and what happens? And you have 13x. If you increase that 3% to 5%, the number increases to 19. That's the power of compounding. If as somebody mentioned, the reforms do happen, the government gets its act together, then that number could be 25x in 2 generations. India will consume and shop more. A couple of things to highlight, especially from a retail perspective. If you see the quantum of growth in the next 10 years, the few categories which sound very interesting to me is if we look at the entire housing and consumer durable sector, we are talking about a 4x increase in that space. The penetration of refrigerators in India is just 18% today. China, it's close to 70%. Brazil, it is close to 65%. There is significant potential. If you look at apparel, in the last 10 years, it had grown by about 3.3 times. As people get more money, they are actually going to spend more on things which are not just essentials. We are going to have significant increase in some of these categories that you see here. Food actually did not grow that much in the last 10 years, 2.4 times, except for those of us who overindulge at meals. Even if you earn more, it's not that you're going to start eating significantly more. However, there is a big difference which happens in the composition of that diet. The component of dairy, meat, fruits, vegetables increases significantly. And therefore, if you look at in the next 10 years, the one big opportunity which is there is in terms of the processed food. Currently, it is less than 10%. It actually has the potential to be at least 20 to 25%. So big opportunity everywhere. This chart, I would not bother to go through each of the individual legends, but what this plots is on the x-axis is you have the size of the store. This takes about 120 different retailers in the US and Europe. And on the left hand, on the y-axis, you have the gross margin per square feet. We actually had to use a logarithmic scale because the range is fairly high. And you actually find the world's class line, the best-in-class line, and where do Indian retailers lie? Most of the Indian retailers actually will fall even below the 50% of the world-class line. Now, obviously, one has to adjust for the purchasing power parity, because what you can buy in 50 rupees here is not what you necessarily buy in $1 in the US. But even after that adjustment, there is a clear indication that if we look at from a gross margin per square foot perspective, India is much below the line. Now, what are the options? Margin expansion is something that many people have focused on, but there is only a certain point till which you can squeeze more and more. One can collaborate, negotiate, and there are different euphemisms for the same, but beyond a point, you can't get more out of that. One of the things that at all retail forums, there is the constant discussion around rentals are high. Yes, they are high, but I don't think there is any structural reason why that's going to change soon. Manpower costs only moving north. I haven't heard of anyone actually talking about the fact that their manpower costs are coming down. So if we look at this, so we have this situation where profitability is a challenge, most of the costs are actually going up, you can squeeze a little bit more from the supply chain and from the suppliers, but where is the big bang going to come from if you want to move up on the gross margin? It has to come from shopping. It has to come from more sales, better mix, and I wanted to share a few slides which lay out the finding of some of the research. Now, we've covered this across durables, apparel, furniture, jewelry, etc., but I will stick to the one category which impacts everybody, which is around food and grocery. Some of the things that you will see here are very obvious, intuitive. Some of them are actually not so. So let me start with the first one. Most retailers feel that the big opportunity lies with the high income, with the SECA, really at the top of the pyramid. The answer actually is not necessarily so. So we found out how much do people spend on food and grocery across different income segments. And what you find here is, I'm just going to take an example. If you look at the traditional affluent, they spend about $130 per month on food and grocery. If you look at the next income level, they actually spend almost exactly the same. But if you look at the absolute numbers, there are much larger numbers in the second segment. So from an opportunity perspective, the aspirers who are in the $7,000 to $20,000 actually account for a much larger potential than the affluent, while the focus for some may be really talking about the first. The second thing which is interesting is what you see at the right-hand side of this chart, the next billion, who most marketers would actually not even consider when creating their marketing plans or the media plans. They actually account for only 30% less in terms of per cap consumption and shopping. However, in terms of numbers, they are much, much larger. So the first point is opportunities are actually there at each of the price points and not necessarily at the higher income levels. This one is fairly obvious, so I won't spend too much time on it. We actually looked at, within food and grocery, what is the frequency? Because that actually has a significant implication on how you think about your network strategy, where do you put your formats and how. Dairy, it's obvious, it's typically daily. Most of the times it's actually delivered to your home. But there are others where there is a huge variation, and that actually differs by segment. No surprise here. We looked across each of the segments and asked people where they shop, how often do they shop, and what's interesting is the fact that the more income you have, the more likely you are to shop at modern trade. But there is a chicken and an egg phenomena here. We looked at this at a disaggregate level at locations where there have been stores which have been focusing on the lower tier income segments. And actually in those segments, the propensity to consume from modern trade is actually much higher. One of the things that sometimes people ask is, if you look at MNCs who have entered India in the last 15 years, what have they done right, what have they done wrong, and so on. One of the things, biggest mistakes that some MNCs have made is expecting that the market will develop. They have been waiting for the market to develop, and the fact of the matter is, some of these markets will not develop unless somebody, that is the retailers or the brand companies, actually develop that market. How does modern trade and traditional trade compare? And whenever I have shared this with some of my retailer friends, they have not been very happy. Because we looked across a bunch of things ranging from location, price, convenience options, salespersons, offers, promotion. How important is it to the consumer? And how does modern trade compare? On a few elements, location, price negotiation, credit, fresh, we actually have modern trade faring lower than traditional trade. This is obviously at an average. If you look at your company itself, it could be above or below this chart. But the fact remains that the small retailer today is serving the needs of many consumers better than what modern trade is. And to those who talk about the death of small retailers, I actually belong to a school of thought which says that it's not that small retailers are going to lie low and play dead. I think they are going to offer, and they are offering, significant and robust competition to modern trade even today. Very interesting thing, food and grocery shopping is actually a group activity with the spouse, with the family, and the one thing which is a key reason for dissatisfaction in the consumers is the fact that there are 3 members of the family, or sometimes 4, who actually are not taken care of. And the retailer's botheration is, while they get 5 footfalls, there's actually only 1 purchase which is happening. So how does one incorporate the group shopping phenomena correctly? I'm going to skip through this one. One final element, many consumers come to the store buying with a list. However, there are less than 25% who buy purely from the list. And therefore, from an impulse purchase implication, there's actually a huge headway, huge opportunity for growth for retailers to increase the ticket size, to increase the basket size, and to share this benefits with themselves and with the consumers. I've had the opportunity to share some of these findings with a couple of retailers, and what I found interesting every time was, while 3 of the messages or 4 of the messages out of the 7 would have been something that they always intuitively known, there were 3 or 4 which were very different in their context. So the one thing to get your gross margin up is to understand and learn how the consumer is shopping and what it would take to get the basket up. Thank you very much.
Thanks, Abhik. Can I now ask Anil Rajpal, Head of Retail and Consumer Products, Global Consulting Practice at TCS, to come tell us about emerging retail models for winning in India.
A very good morning to all of you, and a very warm welcome to this, the Mecca of India retail. And it's indeed a pleasure to be here in terms of sharing our viewpoint on the emerging sort of imperatives and models in India. And I'm going to take off from the point where Abhik left in terms of certain trends in consumerism. and also going to add certain more imperatives or rather drivers which are going to shape up Indian retail. And then we will lead towards the imperatives. So these are some of the drivers which we thought are pretty interesting as well as important in the context of how India is emerging. And you would see that some of these drivers are well known. I mean, they are cliched to that extent that they have been spoken to an extent of, don't say it again. But the point is that they still are as valid as or as important as any time before. And, one has to be really conscious of these points in terms of deciding which way to go forward to and what are the imperatives, and they continue to be as secular as, some of the economic parameters that we see around. So the first is what Abhik mentioned about the demographic part and psychographic part of Indian consumers. And yes, of course, there are favorable signs and, Indian consumers are moving forward and, they're also very getting amenable to shopping kind of thing. So that's the first driver. We will talk about this in a separate slide. The second happens to be more in terms of the competition intensity, and we know India is still a virgin market in terms of the modern trade. Out of 500 billion or 600 billion, whatever the number is, it's only 5% of the market, and that too is very, very concentrated in urban centers. So I think now is the time, perhaps we will see the intensity of competition rising with a different scale and, hopefully with FDI and, other things falling in place. The third is, and this seems to be more tactical than strategic, but still from a point of view of retailer, if you ask him, the biggest pain point continues to be, where are the quality real estate space at a affordable or feasible rental rates. I mean, this is a question which everybody is asking that, what's there? And if that's not going to change, what is the change I need to make into my retail model? And fourth is more in terms of technology, but I think now technology is not technology in silos. It's technology which is begin to create business models. And, and there are obvious business models one can see. And also in terms of how the customers are being serviced. So very clearly, this could be a game changer in many ways. We've seen across the world, and India with such a youth segment, I mean, clearly this is another driver going to be. Now coming back to the first, and I'll quickly go through because Avik mentioned that driver in pretty much detail. Yes, I think this is a debatable point, and the other few months back, I was in in an international event, and people were saying that the per capita income in India is still not arrived, and the doing business in retail in India is tough. So why should I choose between India and let's say China, or Malaysia, or Thailand for that matter? We have 5 times more capita income, etc. Yes, that's a reality, but I think the way it has happened in the past, I mean, there is no way it is going to go other than northward direction. One can clearly see that income levels will rise. And I think few years down the line, the threshold levels perhaps will be breached in urban centers, rural. Rural is a different economy, and, to get into rural retail and to sustain there has been tough and, will continue to be tough. That's what our viewpoint is. And within that process of, let's say, the income group increasing, and the per capita growing, I think there will be several niches being created, and niches with critical mass. And this is a very crude way of segmentation which we have adopted this point of view more from a simplicity standpoint. That there is a luxury segment, there's a premium affordable, and one can clearly see is that there is multiples, and this looks like a more of a conservative estimate, and that's going to be the case. And parallelly, India is a very dispersed market. I mean, 600,000 villages, 2,500 towns, if I'm not mistaken. And look at the aspiration of the people who are there in tier 2, tier 3 cities. They're no less than the metro counterparts. And just a matter of time that, with supply reaching them, with the other things reaching them, and maybe a little bit of affluence, given that, the inclusion part and other things are happening, one would see certainly retail percolating to, the more number of cities. Today it's 50, 100 cities, but how about 500, 800 towns, etc. So what are the imperatives in terms of saying what should be my model or, operating or, format-wise to reach out to these centers? And the second point which, sort of we wanted to discuss was more in terms of the intensity of competition, which can shape the landscape of India. And there have been figures in the market that, the one retailer claiming $1.5 billion and other is saying maybe $500 million, et cetera, et cetera. I think, see, FDI, if it happens and, we can anticipate investments ranging from $10 to $20 billion, that something is, again, debatable. But it could significantly sort of impact the landscape, and especially, if the scenario, which is what, is happening in terms of states saying that, the favorable states versus the states which are not favoring, maybe, the intensity of competition would be higher in states which favor that. And third, which is again a reality, and then given that urban masses or, the urbanization which is happening, and, we're talking about 30, 40% urban population, and growing very fast, we don't anticipate that rentals will come down. And given also the fact that Indian government doesn't have any clear-cut policy on earmarking places for retail space, so we don't anticipate that to happen. So it again has an implication on the retail models one is going to adopt. Technology, I think, again, the point is that the number of internet users, one can see very clearly, are going to jump from 120 to $300 million. And I think very clearly, point is that if I look at the number of Facebook users and the smartphone users in India, they are not going to be less than any parts of the world. Perhaps we are going to be number 1, number 2, number 3 going to. And that is again going to determine the landscape of India. So these were the 4 drivers, and and post that I like to take it to the imperatives or emerging models. And the first one in this is that we anticipate that there will be space for many, and it's also important to define your proposition appropriately. The second is that, the customer engagement model will change dramatically. One would see that, multi-channel may emerge as the way to market and retail. And third is profitability pressures would create compelling reasons to look at your format, the way you operate, etc. And fourth is the way we are anticipating that the traditional retailers would thrive, as Ambika was also mentioning, along with the modern trade. So there are opportunities of collaboration there. So let's look at the first one. Given the heterogeneity in India, and also the fact that the critical mass is going to be there in each of the niches that we mentioned, we are looking at a scenario where there would be feasible formats across the segments. So whether it's luxury, premium, affordable, or a format like Aldi. I mean, India has the lower middle class. There would be formats which will be available for for this segment. But however, it's very important to define the proposition, because as of now, one can see that you would see that apparel or footwear segment, there's a clear segmentation, there's a clear proposition, and you would see that the players have well-defined positioning. But how about other segments? I mean, I'm talking about health and beauty, I'm talking about electronics, I'm talking about maybe food and grocery, because there are limited formats available. So there are positioning gaps available, and it will be very imperative to say that I'm moving from one size fit all to a customized approach, and which is very well segmented model. So that's one. The second thing is that the way consumers are shopping are very different from the way it has happened in the past. And this is not futuristic. This is something which is right now at this moment. And we talked about number of Facebook user. We talked about the smartphone, and I was amazed to see the number of smartphones as 9.5% of the market share in the world will be taken by Indian users in terms of smartphones. So it is going to be fairly, a game changer kind of thing. And just to share one number with you, I think Facebook released official case study yesterday about health and beauty player, and they're saying 20% of the business is coming from Facebook users. So to that extent, this is going to change the model going forward. And we talked about the profitability pressures, and so there is an imperative need to sort of match these diverse trends of the widening assortment and unfavorable rentals, because SKUs are increasing, but the space is getting more and more costly. So how do we match that? And perhaps people may look at the store sizing as of now. Looking at consumer durable retailing, for example, people are looking and saying that, can I reduce the size and maybe have certain portion of my sales going to digital channel? And I'd like to just give a hypothetical case which we modeled, and we said if it is possible to move 5% of your sales to digital channel, there is a possibility of reducing your operating expenses, which is the expenses as in the rental expenses, and maybe increase your EBITDA levels significantly. And so this could happen with other categories, especially the consumer durable retailing, and there's a possibility of increasing your EBITDA levels to that extent. And the second point which I wanted to mention about the imperative was more in terms of the consumer expectations are rising like anything. They are being exposed to multiple things. So whether it's terms of e-commerce players, creating delight for them, or the hospitality or the travel industry, that is going to rub off the Indian retailers. And perhaps there is a need for looking at the operation more frequently than before, because consumers are changing rapidly. The expectation levels are going up only. And in that light, one would like to see that, how do we change our, align our operations to meet the customer expectation? The fourth point we mentioned about the coexistence of traditional retails, and I think people would agree here that there are the outlets, the traditional outlets are going to thrive along with the modern trade. We're talking about 12 million outlets, and they're growing, and with consumption growing, the share of pie, etc., would also, they would continue to have a significant pie. So there are collaboration opportunities which are possible, and including the cash and carry, the franchising opportunity, and placement of private labels, and one would like to include them into the business plan as the retail landscape emerges. So these are just a summary of the imperatives. I would like to leave it here with the audience to have a look at these imperatives once again. Thank you so much for your time.
Thank you, Anil. Next up, Hemant Kalbag is partner and head of consumer industries and retail practice at A.T. Kearney. And he's going to be talking about India's Retail and Investment Attractiveness Index, the FDI hotspot in a cooling world.
Good morning. Good morning, everyone. My name is Hemant Kalbag. I work with A.T. Kearney as a partner in the consumer industries and retail practice. When the Images Group, which is the organizer of this conference, asked me to speak about FDI and the GRDI, the Global Retailer Development Index that A.T. Kearney produces every year. It was probably days, if not maximum a week, before our government announced the opening up of FDI in multi-brand retail. So I obviously stepped back and thought about my presentation and wondered if I should change any of the pages I was going to share with you today. And my conclusion was probably not. I think the messages haven't changed that much on our Global Retail Development Index and our perspective on FDI. So I'll spend about 10 minutes going through a few slides on this topic. Just in terms of context, what is the GRDI? GRDI is an annual publication that A.T. Kearney does that ranks 30 economies around the world on a relative index in terms of attractiveness as new markets to enter. Obviously, India has featured very prominently on this index many times over. In fact, India has been number 1 4 times in the last 10 years. This past year, India slipped to number 5, and I must say that some of the evaluation that was done was before we had a clear indication from our government on FDI. So if this index is a measure of both the risk and the attractiveness, of course it's heavily shaped by the choices our government makes and in terms of guiding new investments and the openness for foreign retailers. So again, this is not an index of attractiveness of markets. It's attractiveness of entry for foreign retailers in these 30 economies. So please bear that in mind. In terms of how the countries lay out, obviously, India fares extremely well, both in terms of market potential and country risk. For those of you who are interested and thinking about global expansion, what's interesting is that sub-Saharan African countries are extremely attractive and rising. But having said that, what's germane probably to most of you is the market potential that India offers, and we project a continued 15 to 20% growth rate, at least in the organized retail segment. I say this cautiously, but I say it, we anticipate favorable FDI norms and significant expansion by global players into the country, and minimal risk as we think about the future. So, why is India so attractive? It's obviously attractive because of the reason all of you are here and all of us are betting on the future of the economy. We have fundamentally strong macroeconomic drivers. We have, while the introduction talked about a slowdown in the GDP, we still have a GDP growth rate that's enviable to most Western economies. We have a rising disposable income, and we have very rapid urbanization that's happening. And then on the right side of this chart, we have fairly good demographics. So our demographics look like a pyramid. Now, if you look at countries like China, many people say that China will age faster than it will become rich, because the China demographic for the population looks a little bit like an upside-down triangle. If you look at the United States, it looks like a diamond. So India is one of the few countries globally that offers a growing consumer for the next 50, 60 years, and that's very, very attractive to any retailer, whether of foreign or of Indian origin. Not only that, we have rising incomes, and we have a workforce that's 50% under the age of 30. So this makes for very, very exciting and enticing demographics. So besides the large market potential, there are obviously some interesting things that are happening in the market. The recent FDI changes, allowing 100% of foreign ownership in single brand retail, 51% in multi-brand retail, is very, very exciting. Large global players, many have already committed to entry, and some might be in the audience today. There might be local retailers who are talking to some of these guys, but you can bet that there is not a global retailer that's out there that is not thinking seriously about the Indian market today. Whether they're already committed to being in the country through a cash and carry format or through a joint venture, or they're exploring the market, I am confident that every single retailer of any consequence globally will at least think about the Indian market in the next 12 months. There's a large opportunity in Tier 2 and 3 towns. Again, this message hasn't changed over the last few years, except I think many retailers have realized that the opportunity exists and are actively pursuing it now. What are the challenges that companies have to overcome? Obviously, I think trying to understand and overcome the local sourcing norms. There were some articles in the paper today about what one of the companies is doing, but understanding these, having clarity around them, and solving it will be a very critical next step in our retail expansion journey. Number 2 is the discretion of state governments. While FDI has been allowed, companies still need to figure out how the states will react. Very often, I get queries from either companies or journalists when they ask me, how will the states react? Candidly, I don't know. I have no idea. But any retailer that's committing to being India in a big way has to now figure out state by state what the opportunity will be. And I think it's a significant challenge to overcome. And then finally, we talk about consistent support from the central government because there is a possibility that there might be a change in the dominant party in the central government, and there are concerns that with that change may come reversals of policies. So I think it's imperative for the government, for all of us, for India in general, to give confidence to global retailers that we are committed to this journey and we're not going to take steps backwards. Moving on, other than some of the legislation changes, there's obviously other changes that are happening that are, while small in the overall macro sense, are very exciting for the country and for the consumer. There is a growth of luxury. As a market, it's growing at 30% every year. So for retailers or the luxury retailers who have historically been, in some ways, leading the pack in terms of global expansion, this is a very good sign. The market is projected to grow to about $7 billion last year, and probably growing at 20% means that this is a significant market for our luxury players. And also e-retailing. While a very small base, the growth rate is a staggering 80%. So it creates new options for the consumer, it creates new options for the retailers, and it creates new options for all of us. Let me talk about this very briefly. There is a window of opportunity in each country that is important for global retailers to follow. And this window of opportunity keeps shifting. What that means is, if you're maturing or closing, doesn't mean that as a market you have matured or closed. What it means is the window of opportunity as a new global retail entrant is closing in on you. So obviously, if you look back at the GRDI index for 3-4 years ago, India was clearly at peaking. But with the significant investment that's already come in, the significant progress that domestic retailers have made, that window of opportunity has been closing. So for the global retailers out there, I think they need to think about this opportunity quickly before India enters the maturing and closing phase, where it'll become much more difficult as a new retailer to win. Very often, mostly journalists ask me, what is the impact of FDI? How will it impact the kirana shops? But the question we should be asking is, how will it impact the consumer? And what we have learned from examples in the past, whether you look at the automotive industry that liberalized significantly in the 90s and 2000, and that created a production of from 5 million vehicles in 2002 to 18 million in 2011, and not mention the consumer choices that it's created. All of us as consumers must have experienced the abundant choice we now have in automobiles, in telecom, in media. So why not replicate that choice in retail as well? So while obviously the kirana shops continue to be an important constituent, but more so for politicians than business people, we should be thinking about the consumer and what choices we'll create for the consumer. And then finally, as we think about the future, the question is, how will FDI impact all of us? By no means do we claim to know all the answers, but as any good consultant, I guess at least we know the question to ask. The first question is, what will the industry mix be like? Who will dominate the future retail market? There will be a lot of discussions in terms of international retailers versus domestic retailers. Is there a real difference? What joint venture and convergence opportunities will it create? How much will shift to online retail? It gives access to Tier 2 and Tier 3 towns in a very meaningful way. What will the segment mix be like? While mindshare is heavily dominated by food and grocery because of the size of consumption, how will that mix change over time? How important will apparel be? How important will consumer electronics be? What other new segments of consumption will emerge because of FDI opening up? These are important questions to answer. And then finally, how will this shape consumer behavior? Will FDI trigger adoption of these formats in a more meaningful way? Will organized retail penetrate faster because we'll see a lot more investment and perhaps a more evolved offering in the marketplace? And then finally, what does this mean for talent? Currently, retail employs about 8% of the skilled workers, but as we all know, middle management is hard to find. So will this create new cadres of talent that will be available to all of us in the future? So these are some of the questions we're thinking about as we think about FDI in the future. Thank you.
Thank you, Hemant. And finally, I'd like to call on Paul Martin, Managing Director at Planet Retail UK, who's going to be talking about retail hotspots and the growth in emerging markets. Paul?
Excellent. Well, good morning, ladies and gentlemen. My name's Paul Martin. I am the Managing Director of Planet Retail. Planet Retail is a global research company. As you can probably tell from my accent, I am based in London in the United Kingdom, but we do have colleagues based all around the world. So I'm going to take a slightly wider approach in this presentation. So you've heard from my distinguished peers around what's happening in India at the moment. I'm actually going to look at some of the key emerging markets around the world, and not just looking at countries specifically, but I'm going to take a look at some specific cities. So this presentation comes off the back of a very large research report we conducted with our dear friends at Deloitte, and we launched at the World Retail Congress in London 3 weeks back. For a number of years, we have been looking at what we called hidden heroes. These are key markets that are maybe not on the top agenda of retail CEOs, but also the key executives of large consumer goods manufacturers. And the answer why we moved into cities is quite simple, because we ran out of countries to profile. So we had looked at Kazakhstan, Nigeria, Peru, Colombia, etc. And we were sitting with our global advisory board, which is constituted of C-level board members within some global retailers. And they said to us, well, one of the key important components for us when we look at entering into new markets is understanding city economies. We don't always look at a country in general, because we will enter a specific city. So this is why we're going to look at some key cities today. These are the 10 cities featured in the report. If you are interested in the report, you can go to planetretail.net. You can download this report. As mentioned, it was launched about 3 weeks ago. So who or where are these key cities? To start off with, we have 2 in Latin America, which is Bogota and Lima. We have to also reiterate the point around the interest levels in sub-Saharan Africa, Lagos and Nairobi, 2 cities in sub-Saharan Africa. But the bulk of the cities we profiled are all in Asia. We have Yekaterinburg in Russia. We have Kolkata here in India, Ho Chi Minh City in Vietnam, Jakarta in Indonesia, Manila in the Philippines, and a really good pub quiz question: what is the largest city in China? It is not Shanghai. It is actually a city called Chongqing. So you can't hear from a consultant without having a couple of key statistics. And this really comes back to the point I was mentioning a few minutes ago, when retailers are looking at market entry opportunity,